Hey everybody, it's Pete. Welcome to Stock Trading Pro. It is Monday and we have a massive amount of stuff to talk about this week. This is going to be a really important week, not only for the stock market, but to really learn whether or not you can actually read the price action and how that price action and what's expected plays into capital allocation. I'm going to be very aggressive trading this week, but most of what I'm going to be doing is trading short term. One thing that you could virtually guarantee in the stock market is the stock market does not like indecision. And with the amount of economic data that came out last week, which is going to affect what the Fed's going to think about this week, plus all of the earnings that are coming out, we have a tsunami of information all at the same time, which leads to lack of conviction. And when the market has lack of conviction, that means that we have to take a step back and really assess what kind of risk are we going to allow ourselves to take. Every Saturday, we have a swing trade session for our members of our active community. And Saturday's session was focused on one really big topic, mapping out the next 2 weeks of trading. So in other words, this week and next week, and whether or not this week versus next week we should be lined up to be a better week of trading. So I want to be super clear. This week is going to have everything that a short-term active trader could want. Volume, volatility, news, economic catalyst, the FOMC, big tech stocks, everything you could think of, right? But what we need to factor in now heading into this week, the week when all of these earnings are scheduled to be announced, is whether or not all of that good mojo, all of that good vibe that we have is already priced in. And we're going to actually compare this to what happened with the internet boom way back in 2000. So when I started trading in April 17th of 2000, it was just after the dot-com boom. And then the market was still kind to digest all of that amazing stuff, amazing potential, but nobody really understood how to monetize it yet. That sounds an awful lot like what's going on right now. So we got to learn from history, and that's going to actually set up the kind of trades for this week. So we're going to talk about capital allocation this week, time frames this week, which stocks are setting up for good ideas this week, probably a sector, or I should say an industry group you probably haven't watched in a while, but my gosh, they've had some of the most amazing trends over the last, let's say 6 months, just to keep it in the realm of swing trading, right? So we got a lot to talk about today. I'm really excited. So stick around, be back in just 1 second. And one thing, I want to hear what stocks you're looking to trade this week. We'll do a quick scan technical analysis to see what you're watching. So be back in just 1 second. Okay, so obviously everything we're talking about here today and every video we do is for information purposes only. It's up to you to make the best decision you can. It's my mission to help you make better decisions. So I want to get real here for a minute while we're talking about the last bunch of weeks of price action. And I'm actually going to do that with a weekly chart of the S&P 500, or more specifically the SPY ETF, and kind of zooming this out over here. You can actually see this window of opportunity here. 12 consecutive weeks of green candles, which essentially means that institutions are coming back to buy stocks week after week after week. They've been able to find the best stocks to buy now. They've been kind of piling into those ideas. And the only red week we have in here where we closed below the opening price for that entire week was right as the year started, which I think a lot of people anticipated, which was called tax selling, like pushing out those profits into 2024, and then ultimately taking some profits, taking a little bit off the table, and then learning to reestablish those positions. Just to give you some language, professional traders call that trading around a core position. So they're not necessarily getting out of the entire position, but when it dictates it, they're actually taking some profits. And then if they still believe that the next move is still available, they'll start to work their way back into that position, which is kind of the way most hedge funds work, by the way. Generally speaking, they're not buy and hold for years. That's pensions and mutual funds and those kinds of things. Hedge funds are really looking for the next catalyst, looking for the next trade, which is kind of the way that we do things in our community, which kind of brings us to this amazing move that we've had to the upside, right? So let's actually just kind of take a look at that. Looks amazing, right? You're writing home, you're like, oh my gosh, just amazing, printing money during that window, especially the last 6 weeks as we've been making new all-time highs. I got to tell you, it's been challenging. I have had a bunch of trades that I really love that didn't make money. I'll tell you straight up, we kind of went sideways a little bit. Let me zoom that out a little bit here. and go to the daily chart of the S&P 500. And this window right here has not really led to consistent price action. That's really the biggest thing I want to get across. And I want to kind of tie this in to actually spotting whether or not there is still good opportunity. We're going to kind of take a look at this window over here, this particular week, and then what transpired since then, and even more so what's going on over here. Now, it's very important to train your eyes to notice what's going on in price action. And the biggest thing in price action here is our job is to pay attention to order flow and tape reading. Order flow is whether or not there's a dominant side to the market and new orders from institutions are coming into the market. Tape reading is whether or not they're following up on that and whether or not it's still valid. So we can see here in a lot of the daily candlesticks, because we're watching it from one day to the next, trying to get clues. Is there follow-up buying pressure, right? We're seeing a lot of what we call melted candles. And melted candles are where we basically open and close in the same place. So if you can really think about that and keep your trading as easy to act upon as possible, we're looking for when smart money, when institutions are allocating money to the market, and taking that a step further, we're looking for something that we call stacked order flow. So if order flow or buy and sell orders coming into the market, stacked order flow is when they're doing that over a longer period of time. So to kind of tie that together and why that's so important, stacked order flow, consistency in buying pressure or selling pressure, but let's say buying pressure, that's just easier. Most people are always looking for the best stocks to buy now, not necessarily looking to sell them. Stacked order flow means that we are seeing consistency and strong allocation from one day to the next. So consistency means over time we're seeing buying pressure, but reading the tape means that we're opening near the low and closing near the high, which means that there's a dominant side of the market that is following up from one day to the next. Now, let's just keep that regular language in our mind, right? So if we kind of tie that into what we're seeing here in the S&P, specifically the SPY, since this little rally that we had over here, we've mostly had melted candles, which means opening and closing in basically the same spot, which means indecision. We had this 4-week trading range, and then we kind of blasted off into new highs. And we have the last week, you can see we actually had 5 candles, 4 of them were melted candles, and the one day was selling. Now, this is even more pronounced over here in the NASDAQ, where we actually had 4 red candles and 5 melted candles. So that's a mouthful, right? So basically, what does that mean? What we're talking about right now is we are not seeing the consistent follow through from one day to the next with larger green candlesticks. And even best case scenario, we'd like to see those large green candles open near the low, close near the high, and have above average volume. We're just not seeing that right now. So we can all agree that that's what's unfolding without kind of putting our rose-colored glasses over the stock market. We have to pay attention to the consistency with which institutions are allocating money to the market, the ferocity with which institutions are adding to the market. Now, we're kind of drifting higher, and I think that we can all agree, whether you call it the Magnificent Seven or whatever, whatever language you're comfortable with, you have to look at market breadth. And you have to ask, is the entire market moving together, or are those dominant large cap stocks still pushing the market? And I think you can very clearly see here, the size of the box is the size of the market cap. So we're not seeing massive buying across a bunch of sectors or industry groups right now, supporting that the whole market is going up. It's those heavily weighted large cap stocks, the Microsoft, the Google, the Amazon, the Tesla, right? Apple and Tesla actually taking a hit and going in the other direction. Apple reports this week, or scheduled to report. The one thing I do want to point out is that little pocket of opportunity over here that we've been talking about, which is energy. Energy is starting to perk up, and we'll take a look at that in a second. So just take a visual of this right now, because it's going to be a really important point that we want to get across. And again, this is really important because there's some moments in time in the market where everything is lining up and you should be aggressive. And then everything that moves away from perfect, whatever that perfect visualization is of, wow, everything is there. Every time you move away from that, that means you should have in your game plan, have in your trading plan more specifically, that when this happens, if it's not perfect and we start moving away from that, that means if I'm looking to buy stocks in a less than perfect condition, what I need to do is lower my allocation of capital per idea, because it's the smart thing to do. So I just want to put this up again. Why is it the smart thing to do? Because we're not seeing follow through from one day to the next, and especially from the open to the close. And I just want to give you a good visual of that again, because it's really important. So if you can take a look here, the Q is obviously a little bit stronger with some of the tech stocks that have been rocketing higher, such as SMCI and probably NVIDIA to a little bit of the same degree, and ASML also, right? So some of these stocks have just been absolutely flying. I guess we could throw AMD in there as well, right? So tech has been strong, a little bit of weakness with all those melted candles last week. And now we have this going on. We obviously have massive tech earnings this week. We're going to take a look at that. We also have the FOMC announcement this week. So I want to walk you through the thought process. Now, this is very important. What I'm about to show you is the research that I put out this morning. And the research is simply based on, here's what I'm seeing, here's what that means to me, and here's what that means to trade. Now, I know a lot of us, we get all excited about learning how to trade stocks. We see patterns and indicators and all those kinds of things, and we can't wait to get involved. But there is a little bit of a higher level just beyond. I understand the patterns. I understand the entries. I understand the indicators. Just beyond that is, what is the right amount of risk that I should take in the current situation? So when the current situation is we're getting pushes and pauses, and there's nice follow through and big green candles and volume decreasing on a 3-day pause, and I'm going to show you a chart of that in a second. That's when we should get some good follow. That's when we are getting follow through. That's when institutions are stepping up, doing it from the open to the close, doing it a few days in a row, taking that break, and then coming back a couple of days later. So I want to give you a chart, and you could take a screenshot of this, because it's probably one of the most consistent ones that we've seen over the last 6 months, which is basically here, this move in Royal Caribbean. So again, you want to take a screenshot of this, because it's very important to have a visualization of what perfect looks like, and then what perfect transitions into. And then if it transitions into perfect, what does that mean? If it transitions out of perfect, what does that mean? So I just want to really highlight this, because it really matters that much. When you understand the basics of technical analysis, the next thing for you to learn is actually how to be a trader. Because I just want you to write this down. Again, I'm really big on Post-it pads. If you're a trader, you probably have them all over your monitor. Is that there's a difference between technical analysis and trading. Trading is not technical analysis, to say it a different way. Technical analysis is the skill of looking at patterns, looking at price action, maybe even getting a little more advanced and looking at volume in the context of that. But that's just setting up the idea. The actual trading aspect of it is what happens after we put the trade on. So you can get a little granular and say that that's also a part of trading, but the actual part, the making money part, the losing less money part, is what happens after we put that position on. So what we're talking about now is managing the trade, but then even a step before that is, before we put the trade on, is listening to what the market's doing and what does that mean for allocation. Now, this is the big thing I want to get across here. If you are risking the same amount on every trade, that means you don't have an edge and you don't have a strategy. It is virtually impossible, and I don't use that word lightly. It is virtually impossible to go into the day, into the week, into the month, whatever time frame you happen to be trading on, and say everything is the same all the time. Therefore, I should always be risking the same amount. Now, you could read a lot of books. Obviously, I got a ton of them back there about 2% allocation, 5% allocation, whatever the number happens to be. But if you want to really level your game up, you have to get to the point where you can recognize this condition is amazing, and that means a little bit more allocation, and expect bigger, and maybe even build a position into that idea, versus the situation has changed. The stock is still bullish, but we're not seeing day-to-day follow-through. So again, I want you to take a snapshot of this, because this chart is a perfect illustration of what we're talking about. And you can see there was actually three different opportunities in the same idea. And the bullish nature of the chart, which you can obviously say, it'd be very hard to say it's not bullish with the stock now, kind of up probably 50% from where it was back in October. So it's still very bullish, but we need to pay attention to say, what is it doing right now? And what does that mean for capital allocation? So for me personally, in a stock like this, we're kind of drifting back and forth, and there is not a larger allocation for this. So hopefully you took a snapshot of that, because again, we get a lot of new members that come into the coaching community, that come in and start the newsletter with us and get the research every day. They want to know, how much should I be putting into these ideas? So always remember that finding an idea is one thing, but then allocating the right amount of money based on that situation is higher level thinking. And you just have to think, if you're going, let's just compare it to real estate. It's probably the easiest thing to think about. Are you getting an amazing deal on that property, or are you paying fair market value? That's really what it comes down to. And if it's okay, maybe you could still do it, but you wouldn't be as aggressive in what you think you're going to get out of that. But if you buy it at a really good price and there's profit potential and the likelihood of that potential being there, then you kind of get in with a little bit more, quote unquote, aggressive allocation, or you put more money into the deal because it's a better idea. So that's kind of what I wanted to get across today. And I want it to be very clear. The last 5 to 6 weeks, it's been a struggle to find some good ideas that have been following through. So what I've been doing with our community, and I've been very clear about this probably since the second week of December. So you're talking about 6 weeks now, where I've made it very clear we're finding ideas, but the market is just not giving us the solid follow through that we would like. So we get some small profits, although AMD was a pretty big trade that we had about a month ago, which was pretty awesome. But for the most part, and here's the thing, that this is really the snapshot of everything you want to listen to right now. Assuming you can read the market, assuming you're placing trades, right? You have to start to pay attention to the results that you're getting on those trades and whether or not you're getting the positive results based on the idea. If the results are amazing, then you can continue to hold longer, build that position, and look for follow through, right? But if you're getting kind of a back and forth, which is, I'm just going to say it, that's a lot of what I've had over the last probably 6 weeks. They haven't been seeing amazing follow through. So I reduced my position size. Now, here's where it really kind of ties home and becomes something special for you. We get a lot of people talking about win-loss percentage and that kind of stuff. That's the wrong metric. I'm telling you right now, win-loss percentage is a vanity metric by people that are probably not really trading in the first place. And if they are, they're probably cutting their profits short just to say they have a high win-loss percentage. What matters is allocating the right amount to that situation. Now, here's where I'm going to really bring this home, right? And again, if you have a notebook, this is really where you want to start to take notes and put some of this in there. If you recognize market conditions are a little bit tougher, and sector to sector or industry group to industry group, you could find some ideas, but you're not necessarily getting a really clean push and a pause and a great spot to get in, and the results have been okay, that calls for lowering allocation. So if you are getting less than perfect feedback from the market based on your results, and you start to recognize that and pull back on your share size, then if the market continues that spotty, less than perfect follow through, even if you have a couple of losses, it's not really that big of a deal because you lowered your position size. So you could even have 3 or 4 losses on good ideas that don't follow through. But if you recognize the conditions and lowered your position size, it's okay. Because when the market does unfold and start to give some better opportunities, meaning better follow through from one day to the next, it becomes one trade wiping out probably 5 or 6 small losses if you did what you're supposed to. If you don't do that and you maintain your aggressive position size because you didn't learn or understand the market conditions were tougher, therefore I should lower what I'm willing to risk, then you probably dug a hole for yourself and you're probably angry at the market at this point. So I had some losses. I had some trades that didn't follow through, but I lowered my position size. So now it just takes 1 or 2 good trades to be massively profitable for the month, keeping those losses smaller without follow through. Now, I know it sounds weird. We're not getting follow through, at least in a lot of the ideas, but we've been getting pushes and pullback. And there's a reason for that. There's a lot going on in the market right now, and there's a lot being anticipated. And probably this right now, the Fed this week is the biggest thing. Now, I think that everybody pretty much universally agrees right now the Fed's not going to do anything this week. But what does matter is what they say after the announcement. Whatever the odds are right now, but they're heavily skewed toward they're going to do nothing now. And then maybe towards March, I believe they're talking about where there's a possibility of them actually reducing. So the market rallied at the end of 2023 on the anticipation of the Fed cutting rates sooner. The Fed keeps saying, hold on, we never said we're cutting rates sooner. Now we got GDP coming out. We have PCE coming out last week, and all that data came in where the market is actually a little bit hotter than expected. So that's a mouthful, right? So let's kind of break down what that looks like, what my game plan and my thoughts are heading into the week, and why I think next week is going to be an infinitely better week of trading with conviction than this week. We have the Fed this week, we have more economic data this week, and we have massive earnings this week as well. So one thing you want to write down is the market does not like indecision. The market likes clarity. The market likes to know nothing's in the way and let's go get them, right? That's not the case this week. I'm going to break that down for you now as well. So let's take a look at the daily ticker and break down how I'm looking at ideas this week and how we kind of mapped it out for the community. So if we kind of work our way through what the ideas are, I just want to bring this down. Let me move that out of the way. All right. The easiest money in the stock market happens when things are obvious. Everybody can agree on what's ahead. Those are the moments we open up brokerage window and a hint of confidence to buy stocks with conviction. Now, this is the key here. That is not the next 5 days. So before we even get into the rest of the picture here right now, right? If we know that all of this conflicting, massively important information is coming out this week, what should that mean for our conviction to buy stocks? What should that mean? We've already seen Apple have 3 consecutive quarters that really weren't that awesome. They're actually forecasting numbers are going down. Tesla stock got absolutely demolished last week and is still setting up as a continued sell short. And if we kind of actually look at Tesla on the charts, it looks like 160. We get questions about this all the time. Tesla around 160 down in this area over here is really the next level where I'm looking for support. So we also have that, right? So we got Tesla getting clobbered, Boeing, which seems to have bad news every day after a massive move to the upside, a massive move to the downside, and more bad news coming out over here, bear, and now earnings coming out in a couple of days. This stock has kind of been all over the place and obviously a big industrial bellwether, right? So now we have Apple coming out this week. We have Amazon coming out this week. We have Google scheduled to come out this week. We have Meta also scheduled to come out this week. We have Boeing, Merck. There's a lot going on this week. So what I want you to do is challenge yourself. Go further than just doing technical analysis and ask yourself, what is the right kind of risk for today's situation, for this week's situation? This is a key. And I'm going to walk you back to 2009 when I had one of my biggest losing weeks ever. And it sounds like I'm talking about losing a lot here today, but we have to talk about both sides of the market. We can't just be talking about, hey, the stock market was great and I was printing money every day. That's just not reality. And quite frankly, it's not necessary. You have to make more when more is available and manage the downside. Way back in 2009, the XLF and a lot of the financial stocks were in play, obviously coming off of the crisis of 2008, and they were in play. We trained them a lot. There happened to be 1 week where, or actually it was probably about 10 days where they were rallying, but then they kind of got stuck in this box. And I was aggressively trading inside of that, waiting for it to pop out, and trying to get a head start on it and getting in there with massive size. And it just didn't happen. And about 2 weeks into that, my business partner took me into the back on the trading floor. And he's like, what are you doing? It hasn't moved yet. And I lost pretty decent amount of money that week simply because I wasn't paying attention and I didn't understand in a bigger way how to map out what's the right allocation for right now. So right now, this week specifically, with all that economic data, with all of those big earnings coming out this week, I am not planning on taking bigger risk on swing trades this week. However, the shorter time frames, whether it's day trading or maybe 1 to 2 day trades, which I guess that could still be considered a swing trade, much tighter to the vest, looking for quick pops, very similar to what we saw in American Express last week, which was just an incredible move after earnings. So with all of these earnings reporting this week, let me kind of zoom this in so everybody really has a pretty good idea. Obviously, Microsoft, Google, AMD, Pfizer, UPS, Starbucks, like there's a lot of stuff happening this week. I'm planning on being a little bit more aggressive short term, letting this week kind of work its way into the system. Best case scenario, we pause on light volume, which I doubt we're going to get light volume this week with the amount of news we have. Then look for next week where the economic tsunami kind of lightens up a little bit less on the big cap tech stocks reporting. And then we could kind of maybe, if we get the good optimal entry, get a little bit deeper into the next trade. So I want to be super clear. I talked about how I plan to trade stocks this week. That has to be factored in with how the stock market looks this week and how that sets up for new trade setups. So because of all of this news and because of the last 6 weeks of not getting perfect follow through, I am lowering my capital allocation this week per trade. I'm still going to take all the ideas that match my opportunities, but my increased allocation will be on a much shorter time frame to take advantage of short-term volatility, short-term volume, maybe pops off of some of these earnings announcements. And if you actually happen to use VWAP or anchored VWAP, that could be a very good short-term way of trading as well. So kind of mapping that out and kind of tying that into sector rotation this week, that's the next thing I want to walk you through, is how I'm looking at the market from a sector rotation perspective and where the top stocks are, the best stocks to buy right now for me for this week. So that means now we need to kind of work our way over into our research document. And again, this is the research that I do for the community. You can actually see what the last 4 to 6 weeks have been like. So this is the last 4 weeks. So if you look over sector rotation over a 4-week period, you can see that you really had to be on top of your ideas and go into those individual pockets of opportunity, because the market just really has not been that clear. And if we kind of work, and I know that sounds weird making new all-time highs, but if you've been trading every day, you understand what I mean. So if we kind of work our way into the metrics and work our way over to what that means for how things have traded, you can see the advanced decline line has kind of been all over the place, back and forth for the last bunch of weeks. The high-low difference has been strong, but look at this in between here where we just really kind of melted in the middle of nowhere. And now we take the 20-day high to 20-day breakouts. Look at the rally here that we had to end last year, and look at what the market's been here. Kind of bringing that even further into rotation and getting into what we're seeing so far for this month. Look at how much red is on the board over a 5-day period. So again, you start to put these clues together, and you can see that over this period of time, other than maybe the last week or so where we're getting a little bit of more pop coming off of earnings, we've mostly been for January, again, kind of putting into what kind of results you got for January versus what was available. This is gain or loss for the previous 5 days, totaling the stocks in each sector. You can see it's been very spotty. Kind of work that in a little bit deeper, where now we do math on percentages of stocks positive versus negative. And you can see it's not one real beautiful flowing metric, kind of like we had here at the end of last year and December, where the majority of it was green. So you can see that you really need to stay on top of where and which stocks have institutional attention. And you got to really judge that based on the time frame you plan to trade. Are you day trading and every single day it's changing? Are you doing like mostly what we do, is which is for the week, for the month? Or are you a little bit longer time frame out, where maybe you're doing a little bit more investing type, looking for value plays? A little hard to find value plays right now, right? So there's a lot to unpack here. Now, this is the biggest thing I want to get across. If you are not getting follow through right now and maybe losing your confidence because follow through has not necessarily been there, or you're seeing these explosions and they happen without you, just think long term. There's so much opportunity in the stock market. Don't chase a late entry. Don't get frustrated. Maintain your positive enthusiasm for stocks, because if you manage the downside during tougher market conditions, then you didn't dig yourself a hole that you have to fight out of when it gets obvious. And again, I want you to write this down. It's not hard to make money when it's obvious. It's all those other times when it's not obvious that we have to maintain our sanity, put the right amount of money into the individual ideas, and kind of just make some profits and some small losses until we get some good follow through and the market picks up. So the whole thing, the whole summary for this week is essentially, I'm looking to take advantage of some of the news, but not necessarily trade bigger allocation until this week is over. Now, the big thing on Wednesday with the FOMC announcement is what they say, which I think everybody is going to agree right now. They're not looking to do anything. At least that's what all the statistics are showing. It's the language, though, at 2:30 that will matter. What does Jerome Powell say about the outlook for 2024, and what kind of clues does he give about whether or not they plan to lower interest rates sooner, if at all? They have not said we're straight up lowering. I mean, the interest rates, inflation's coming down, gross domestic product was up. I mean, think about what we've had over the last year. Fear of a recession with 2 negative GDP quarters, everybody and their grandmother talking about the inverted yield curve, and we did not have the recession. We did not have the recession, which was historically accurate for everybody to be talking about. We had the consumers still spending a lot. Gross domestic product is going up, all while interest rates were going up at the same time. And now inflation is starting to come down. The stock market could be lining up for a really nice bullish move, but we need to see a little bit more consistency from one day to the next. That's the big thing that we need to see. So what I want to do is I want to work you through a little bit of some of the ideas that I'm looking at for heading into this week, because I just gave you the full context for everything. Is now I want to give you some ideas. So obviously we just took a look and see what the SPY is doing. If you want to read this, you can actually pause this when you watch the replay of the video. But basically I want to get into what's going on in sectors. So communication services, right? Obviously Netflix had this monster move last week. Earnings came out. They were good. Finally got out of this extended box. What I'm looking for now is I'm looking for Netflix to pause. Now, communication services is actually at the top of our list here between over the last 5 days. But you can say actually communication services is actually leading over the last 21 days. So they're actually trading pretty well. So I'm going into the sectors that are obvious right now. So communication services, you can see what I'm looking for. I'm actually mapping out the next couple of plays where I'm not looking to chase Netflix. I'm waiting for it to pull back before I put on a new position. I don't want to chase this move to the upside. Spotify and Disney, they're both at or near optimal entries. But again, you need to know where your earnings are coming out. So we always make sure everybody's aware of that. Disney has actually had a pretty nice turnaround this year where new CEO coming in, Bob Iger, making a big splash when he came back in, and they're kind of holding the bid right now, right? And you can see we got some profit potential here, a much bigger potential if we can get through there. Spotify, a nice 3-day pause with roughly another 30%, 20 to 30% move to the upside if it can actually push, 14% move. Financial stocks, we talked about American Express before, and if you're on top of the market, credit services have been a very big part of the market. So we can talk about credit services with American Express, Capital One, MasterCard, and Visa. All of them have been in play. And look at these beautiful trends. So again, this is why you got to stay on top of this. It only takes a few minutes. If you want, I'll do all the work for you. Just click down in the description. You can see how to do that. So again, working through where is institutional attention and which stocks can we shadow. Working our way through banks. Financial stocks. We both have regional banks and the larger banks, Citigroup, Ally, KKR. KKR, obviously a asset management company. Then we go down to a couple of regional banks. Western Alliance has some profit potential here. And Zion, actually, if it could pop through this 42, has some room to go as well. So you can actually start to see how we're working our way through some individual ideas. Now, this is one of the more interesting ones. We got a lot of questions about energy this week. If we kind of take a look into the research, and we can see energy for the last week actually popped its way to the top of the list. So when you're doing this kind of work, you're actually noticing the sector rotation. You're noticing institutional attention changing from one sector to the next, right? Kind of working our way through and hopping over here. You can actually see energy, which was negative for a good 3 weeks, starting to show signs of life and actually the number going up. So now it has our attention. Take a look at the percentages of stocks that are positive out of all the stocks in the energy sector, and they're starting to grow by a dramatic number. We went from negative 76% to positive 93% in that sector. So what I want to get across here is spending that little bit of extra time of doing this research, doing the scanning, having a process of looking at which stocks have institutional order flow. It becomes a lot easier to say, I'm just going to shadow them instead of predicting what they're going to do next. Who cares where it's going to be 3 months from now? If we have a process to say, this is where institutions are allocating money, and this is the strength and the amount of time that they've been doing it, it's a heck of a lot easier to shadow the institutions as opposed to just saying, where do I think it's going to be 3 months from now? Nobody knows. But if deep pockets with all that research are still putting money in, remember, go back to that chart that I showed you of RCL before, we can track that stacked order flow, and then we can track when it changed. That's very, very important. When you learn to read the market as opposed to predicting the market, you sleep a lot better because we're not guessing what's going to happen next. We're simply saying, here's what is happening, and here's what I plan to do if it continues, and here's what I plan to do if I see the story has changed. It's a lot easier to trade that way, okay? All right, so let's kind of work our way into some of the ideas. I just gave you the breakdown of what I'm looking at for the week. The other thing I just want to point out for the week is a sector that I'm watching. Obviously, energy popping this week. MPC and PSX Two stocks that I'm looking at this week. PSX is a little bit beyond the optimal entry, though. We need PSX to calm down and cool a little bit. So probably looking for a nice pause here and then looking for another pause. If we can get something closer to 138, 136, 138, I'll be taking a look at that as well. The last part of what I'm looking at this week in industry groups are insurance stocks. Keep an eye on some of these insurance stocks. Prudential, HIG, Allstate, Aflac, all resting right at obvious levels, looking for new breakouts. And you can actually see Allstate has been just an absolutely fantastic stock for the last, 6, 7 months. Look at that breakout. Look at how clean that breakout is and good for 116 to 160. So when you start to do this on a day-by-day basis, it becomes pretty easy to spot where the opportunity is and which are the best stocks to buy right now. All right. So that's the rundown for this week. I just wanted to take a look. Let's see. Gavin, taking a look at VLO, MPC, Dino. Yeah, look, I'm with you on that energy sector. I'm 100% with you on that. Maybe some of them are a little bit beyond the optimal entry. I think even PBF is like to the moon right now. Yeah, a little bit beyond, but these things pause a little bit and come back to this level. I'm actually okay there. Let's see. Hey, Simon, good morning. Short ON. I like that one too. That's actually shown relative weakness to the rest of the market. It's got earnings coming out over here, but you can actually see with the market going up and tech going up, and especially semiconductors going up, this stock is showing some relative weakness. So I actually like that. Nice call on that one, Simon. Don, Mike, always love to see you here, Don. Thank you. All right, let's see what else we got in here. I just want to make sure I cover it. Lewis, how are you, pal? Miss you in the community. Hope all is well. Short all of it, but I am long Boeing. All right, so you're bottom fishing Boeing. Oh boy, what kind of bait are you using to bottom fish that thing? You got bad news and you got earnings coming out. So that is a very, very aggressive trade. I could see, look, I'm not going to lie. I can see why you're doing it, but it's not something that I would teach in the first chapter of any of my books. I could definitely see why you would be looking at it though. Let's see. VTNR. Good morning, Joseph. How are you? VTNR. That's not a stock that I've actually ever traded. I generally don't trade penny stocks, so I'm not going to comment on that. It really wouldn't be something I would comment on if it's not something I would trade. So anyway, watch this video more than once, everybody, because we really broke down from a professional perspective. There's so much more to trading than just saying I see a pattern. When you start to put the pieces together and say, what is the right risk for the likely profits available? And what is the story right now in the market and whether or not we have indecision or clarity? When you really think those things through, it becomes a lot easier to move your allocation up or down, and that helps you sleep a lot better. So you actually would lose less on ideas that are less than perfect, and you'll be positioned for those massive big gains when you do get some follow through. All right. If you have any follow-up questions to anything we talked about here today, please do me a favor. Leave a comment below. I will get back to you as soon as I can. If we did a good job today, I promise also I will do it again. And give us a thumbs up and subscribe if everything we did today helped you out. All right. Have an awesome week. There's a lot going on this week. Any follow-up questions, put them in the description below. I promise I'll get back to you. Have a great day, everybody.